Welcome to the Keiser Report. I'm Max Keiser. You know, Britain's days as a haven of political economic stability are numbered. And I'm not talking about all that special kind of crazy going on with George Osborne at PMQs. No, no, no. I'm talking the so-called safe haven status of the UK. Bye-bye. And you see, it's not just me saying this now. Stacey.
Yes, and before we go into that first headline about the safe haven status of the UK being go, 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 bye, 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 let's talk a little bit about George Osborne, because he went viral last week at Prime Minister Questions Time, and the Prime Minister is up there talking all this serious stuff, and behind him is George Osborne doing this, like, it was, what was going on?
Well, I think it's possibly amyl nitrate. You know, anyone walking around Soho these days, you see those little vials of canisters of amyl nitrate that they fill up gas balloons, and they have the goofy gas.
Yeah.
George Osborne obviously was out having a good time, and I'm sure behind the benches over there on the Conservative side of the House of Commons, you'll find those little canisters littered everywhere. Him and Cameron, amyl nitrate. Oh, who knows what else they're into?
Well, you're just saying that allegedly, right? You were
yeah, I'm allegedly
satire.
saying that George Osborne and David Cameron are doing amyl nitrate in the House of Commons as part of some other activity. Allegedly, it's actually a club I saw on Old Compton Street. I think I saw George coming out of that at 3 o'clock in the morning.
Or somebody with a George Osborne mask. So let's talk about the economy over which George Osborne presides, of course. Why Britain's days as a haven of political economic stability are numbered. And this is from Anatol Kaletsky and Reuters. And he says, for the past 5 years, Britain has been a haven of political and economic stability amid the turbulence in Europe. No longer. And he's saying partly because of all of this, like Scotland wanting to secede, and then we have the Tories lost the Rochester by-election to UKIP, so it's going to bring in more political instability in the next election. In fact, you might have even bigger coalition governments that will only last a year. And because of that, he says, yet the loss of Britain's safe haven status is not yet factored into asset prices, especially sterling. The pound is still near its strongest since 2008, despite the country's current account and budget deficits, the biggest in Europe relative to gross domestic product.
Well, I tweeted a couple of days ago that, wow, too bad those Ferguson protests haven't also appeared in the UK, because there's a common cause between the protesters and rioters in Ferguson, Missouri, who are protesting and rioting against police brutality and police racism. But then the next day, there was a huge protest outside the American embassy in London. So this shows the global insurrection against banker occupation has in fact gone global, and the UK is vulnerable to its status as a safe haven. So I would imagine, just as all these countries around the world are experiencing huge upheaval, the UK is not immune from this type of political and social upheaval. And the politics in this country, they're going into a locked parliament again, even worse than before because of the rise of UKIP, and they're going to have political gridlock, and in that vacuum will arise revolutionaries like Russell Brand. Russell Brand could be mayor of London if he really wanted to, because there's a political vacuum. The Conservatives, the Lib Dems, the Labour, they're mired in internecine warfare, and into the mix, into the vacuum, arises Russell Brand as mayor of London.
Well, yes, that's true. And so we go on to what the Anatol Kaletsky says, of course, is there's this whole turmoil about Europe, whether or not the UK wants to be part of Europe, whether they're going to exit, who's going to do this, what's and the turmoil of that, and that hasn't been priced in as well. So he says, but whatever ultimately happens, outbreaks of political panic are near certain in the 6 months before the general election. Then again, during the period of turmoil and ungovernability leading up to a snap election and EU referendum in 2017. Investors and businesses in Britain are queuing up for a roller coaster ride. But this is also the same for pretty much anywhere you look. Investors are lining up for a roller coaster ride, because despite whatever evidence that is presented to them, they're desperately seeking yield.
Well, amazingly, the policies of these Western governments is not to encourage employment or manufacturing or anything else that would be associated with GDP growth. They're only targeting stock prices. And they're doing that with money pumping and printing through the central bank system. And that's their proxy for the economy is doing well, even though the average, the very few people, across the economic spectrum are actually participating in these stock market rallies. That nevertheless is their own proxy for success. And in America, actually trading on inside information is legal. So the congressmen and the senators are actually trading on inside information to benefit themselves. Oh my God, George Osborne's right here. I see George Osborne. And
anytime you talk serious, I just act like George Osborne.
Lucy in the Sky with Diamonds.
Allegedly.
Coming out of the Allegedly Club on Old Compton Street at 4 a.m. with a bunch of amyl nitrate canisters littered about the street. Oh wait, there's David Cameron. What are those two getting on about?
It's true. We do walk through Soho all the time, and there's those little tin canisters everywhere. But, you know, again, investors are lining up for a roller coaster, and we said here long ago that these people lining up to chasing yield in the energy sector in the United States, where junk bonds are financing the entire...
Oh, chasing yield. Well, that's a whole other old load of codswallop. Chasing yield. I mean, that's got the, you know, the fingerprints of mass financial suicide written all over it, because more people have lost money chasing yield than chasing penny stocks or chasing the next hot sector. Chasing yield is the province of that special breed of loser in the marketplace, the yield chaser. So as the interest rates come down and more people get desperate for that passive income coming every month, they extend their risk tolerance like the frog in the boiling water. They'll say, oh, I'll take a double A, I'll take a single A, I'll take a triple C, and pretty soon they're completely cooked because the bond market, as always, you know, has to revert to the mean, which would mean a crash in the bond market like we saw in 1994.
Now, you said that chasing yield is the equivalent of picking up pennies in front of a steamroller?
That's right. That's another Wall Street saying, picking up pennies in front of a steamroller. So the risk reward ratio to buy a sovereign bond like a UK gilt paying 1 or 1.5% is insane, because the chance of losing money is about 100%. But, you know, for a few days there, you're getting some 1.5% annualized rate of return, but the steamroller, you know, catches your ankle, and then before you know it, you can't get out of that situation. The steamroller completely obliterates you. It's been 20 years since we've had a major global bond crash like in 1994, so we're completely overdue for a bond crash.
Of course, picking up pennies in front of a steamroller on Old Compton Street has a double risk.
Well, that's where I first saw Cameron and Osborne. They were engaged in some kind of ritualistic penny grabbing. It was hard. One of them had a crotchless panties. I don't know which. But
allegedly. At least it was somebody who looked like
allegedly
it. All these English people look the same to us, you know,
right.
Americans.
Well, you know, Brits have nice.
Okay. Well, there's another, you know, investors got hit by a surprise from Seadrill, which is the largest oil and gas driller in the world, and they're Norwegian. The oil services sector rocked by plunge in Seadrill's stock. They were hit by a 23% fall in their stock price. Now, Rune Magnus Lundtre, which is their CFO.
Well done.
He said one of the biggest causes was this, the sanctions on Russia. So they have signed their biggest deal in their history with Rosneft, but a lot of the parts of their drilling rigs have American parts in them, so it's becoming very expensive for them. So he said that the uncertainty around Rosneft, which has been affected by Western sanctions imposed on Russia over the Ukraine crisis, had added to negative sentiment in the energy industry. U.S. sanctions on Russia, quote, look very challenging to operate within given all the U.S. equipment on our rigs. But Mr. Lundtre said Seadrill is still working with Rosneft, having just extended a walkaway clause to May next year. But again, over $2 billion was wiped off the share price. So that's investors' wealth evaporated right there like that. And this is going back to George Osborne, these are the sort of people determining our, you know, global economic policy.
Well, he's definitely getting fracked on a regular basis. But, you know, this is the amazing thing about the history of the energy business, because it's an incredibly capital-intensive business. It takes a lot of frickin' money to go drill oil, extract oil, process oil, refine oil. And so pari passu with the development of the oil and gas industry around the world is the banking industry, because the banking industry has been lending into that business, that global business, lots of money. And so you see this incredible bond proliferation around the world, principally because of the energy industry has really been the foundation upon which the global banking system has been built, because of the needs on that industry for borrowing money. So here you have a situation where America decides that, you know what, we're going to put sanctions on Russia, and we're going to step out of our role as being the petrodollar and just the financier of the oil industry. We're going to frack, and we're going to drill, and we're going to produce more oil than Saudi Arabia. So what happens to the global bond market servicing this industry as such when you add supply onto the market cheaply, as they are doing? You have a crash. So America is either A, economically brain dead, B, run by shysters, or C, all of the above?
So even though the price of oil keeps on declining, all these shale oil producers in America are saying, we're going to continue. We're going to fight this fight against Saudi Arabia. But here's a headline that will take you back to your days as a broker, because I remember you've told me stories about the 80s, going to Houston and seeing empty cities after the collapse. The see-through city. Well, oil bust of 1986 reminds U.S. drillers of price war risks. The last time that U.S. oil drillers got caught up in a price war orchestrated by Saudi Arabia, it ended badly for the Americans. In 1986, the Saudis opened the spigot and sparked a 4-month, 67% plunge that left oil just above $10 a barrel. The U.S. industry collapsed, triggering almost a quarter century of production declines, and the Saudis regained their leading role in the world's oil market. So a lot of Americans are running around in sort of like flashbacks to that time, maybe like George Osborne, looking a lot like George Osborne, having flashbacks.
Well, what happened in 1986? You had a huge, as you point out, the see-through city in Houston oil crash, and what happened a year later? The stock market crash of 1987. So kind of the rug was pulled out of this unholy alliance between oil industry and financiers. So within a year, the entire bubble completely collapsed. So if we are, in fact, experiencing a similar, like 1986 collapse in that oil finance business because of crashing prices due to ill-advised sanctions, you know, even Henry Kissinger said that the sanctions that the U.S. and Europe applying to Russia as it relates to Ukraine, even Henry Kissinger said the NATO expansion into Ukraine was a foolhardy,
He's kind of one of these George Osborne.
And he's a warmonger. He's a frickin' warmonger, and even he had to admit that this is the stupidest frickin' thing.
He's more like Gollum.
You know, if you've lost Henry Kissinger, you know, you've lost the battle, I would say. But anyway, Stacey, you know, we're getting time now to say goodbye for this first half of the show because we have to take a break. What? Uh-oh. It's Georgette Osborne. Look at all these canisters on the floor. My God, you've got to stop that amyl nitrate. All right, well, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Liam Halligan, a journalist at The Telegraph who spent a decade in Russia, where he ran an investment fund. But he's back in London and right now on the Keiser Report. Plus, Liam, here it is, BNE, Business New Europe. You're going to be the Economist magazine of the East, is that right?
Well, this magazine started in 2006. It's just taken in a new investor. We've merged with IntelliNews. We got 40-odd correspondents.
And you've got a column here called The Invisible Hand.
I got The Invisible Hand,
And in this column, latest column, you say that the G20 is kerfunked. There's a what? Tell us.
Well, I think, Max, there's a real contrast. In mid-November, we had the APEC summit, Asia-Pacific.
The APEC, yes.
Asia-Pacific Economic Cooperation. You've got Russia in that, China, and the US. And a huge amount of business has done at APEC, including a big gas deal, another one between Russia and China. And many, many other bilateral deals with real hard cash. And then you had the G20 in Brisbane just a few days after, and almost nothing happened beyond a vapid communique.
So everything's moving east.
Completely uncosted.
Russia's moving, China, everything's moving east. That's where the action is. That's what you're covering. Everyone's going there. Except NATO.
Except NATO.
NATO can't come.
Well,
they're not allowed. They're being shut out.
BNE covers Eastern Europe and CIS and the Baltic states and Central Asia. And this is a market of hundreds of millions of people, a $2 trillion market cap in total that gets very little coverage in English. And yet it's a big emerging part of the world.
All right, it's called BNE,
that's what
Business New Europe. It's a new publication. I'm a subscriber
www.bne.eu.
Fantastic. Now, the reason we have you on, Liam, is because you wrote this column at The Telegraph called Japanese QE Tsunami Risks Global Meltdown. Now, I've been reading your column for years now. It's really a great column. I always never miss it. But this one in particular, I think was extraordinary because it gets at this point that over the past, really since 1989, when Japan started their quantitative easing to try to revive the economy that crashed. Remember, 89 crashed, stock market, the Nikkei was down from 40,000 to 8,000, the property bubble crashed, and they engaged in this quantitative easing, and they are the leader, the global leader. And we saw something remarkable because the Fed, under Janet Yellen, recently said, okay, QE3 is over October 31st, but Japan just the next day said QE, I think it's 12, picks right up.
QEN.
So isn't there a global QE? Isn't Japan at the epicenter of it?
Yeah, the idea that QE ended in the States and nothing happened, meaning that the QE unwind isn't dangerous, that's of course an absurd idea because the QE baton was straight away passed to Japan. And anyway, in the background, every daily we have hints from the ECB that they will soon start doing overt QE. We've had kind of corporate bond QE under the counter, if you like, from the ECB for many years. They've doubled their balance sheet in the last 5 years, and we could soon go to sovereign QE in the Eurozone. And everyone knows, of course, in the run-ups to the US election, particularly now Obama's lost the midterm congressionals, if there's the slightest hint of real trouble on Wall Street, then the virtual printing presses will start up again in Washington.
So QE, basically, the government is buying back its own debt. You know, they issue a debt, and then they buy it back, essentially.
Effectively, yeah.
So
they do it indirectly, so it's not absolute overt monetization.
Right. Well, the difference between QE and monetization is that QE...
There's an accounting trick.
There's a tacit idea that someday they're going to unwind it.
Well, that's one of the
If they don't unwind it, then it's just outright monetization.
Then it's outright monetization.
Which it is, in effect. Would you say, Liam Halligan, that anyone who says this isn't outright monetization is smoking crack? I don't know if you'd use those terms, Liam.
I doubt many global central bankers are actually smoking real crack, but I'd certainly say, and I think most economically literate people without a big stake in benefiting from QE would agree there is quite serious obfuscation happening, and this is an unprecedented monetary experiment.
Who benefits? The people who are selling the bonds to feed this QE monster. So the Wall Street banks, the City of London banks, they're the ones who are benefiting from all this because they get the fees from building up this enormous QE. But you have some statistics here, some numbers that are really incredible.
And governments benefit, of course, Max, because by basically the state buying their own bonds via their central banks, albeit with a little accounting
Well, they keep
shimmy.
interest rates low.
They keep interest rates low, but it generally means that governments don't have to address the massive fiscal issues that stalk the Western world. They don't have to make tough decisions on spending. They can just keep borrowing. Here in the UK, we've had a triple-digit sterling budget deficit now for 6 years in a row. There's a good chance, even though we've got much stronger growth in the UK this year, that the budget deficit will actually be even higher than it was last year. By rigging the sovereign bond markets of the Western world allows Western governments to not level with their electorates and to take the fiscally easy route.
But QE, the only growth they have in the UK is debt, because the debt under Osborne's up by almost £1 trillion. And the deficit, as you point out, is not going down. This year, year over year, it's going up. So why did they do all this austerity? Because that's nonsense. There hasn't been any austerity. The only austerity has been imposed have been a wealth transference from savers to speculators. That's the only austerity. There's not actually no debt repudiation. There's no debt paying down debt. Austerity is a hoax.
Well, you're right in the sense that government spending for many of the past months, government debt, sorry, for many of the past months, the extra borrowing they've taken on has been bigger than the increase in GDP. And also household debt is pretty much where it was at the time of the subprime collapse. Having said that, there are parts of the UK, and you have many viewers in the north of England, of course, that are quite dependent on state spending, and there have been some state programmes which have been cut back quite severely. So for some households in the UK, and certainly across the Eurozone, there has been real austerity. But the overall envelope of government spending, there hasn't been austerity. We've had real terms increases overall, and that's at a time, and this is what really worries me, Max, when interest rates have been very, very low. So debt service costs in the UK, where we're sitting now, they're slightly more than the UK spends each year on defence. But if interest rates go up just a couple of 100 basis points, which they easily could, we'll be spending more on debt service, not paying back the debt, just rolling it over again and again, than we do on education, on state education in this country.
The UK...
And that's when I think morally the electorate will crack and say this is completely egregious, that we're spending more on debt service, and a lot of our creditors here in the UK are now foreign creditors, so our debts are increasingly dragging down our balance of payments on the net property income from abroad side. Once we're paying more to service our debts, a lot of that debt held abroad, than we are to educate our children in the state sector, then I think politics will have to change.
Yeah, UK pays £1 billion a week in debt service.
Yeah, something like that, yeah.
That's right.
About,
So
yeah,
that's
about
52 billion
absolutely.
pounds
at
a
very
year.
low rates of interest.
At low rates.
So what happens?
And the reason they're low is because of quantitative
we're
easing.
rigging the bond
It's
market.
accounting fraud.
Absolutely.
All right. So, but Japan, you see, the point of this, which you touched on in your Telegraph article.
Yeah, let's talk about my article.
No,
Stop asking me questions.
No, but I mean, this is the UK is part of the circle of fraud, but the center of the fraud is Japan. They're because their debt to GDP is
240%.
240%. The UK is.
Well, there are many definitions. Officially, it's about 90.
90.
Maastricht terms, it's about 100. Unofficially, if you include public sector pension liabilities, it's more like 150. If you then include financial interventions, sorry, it's complicated.
Then private debt,
then
it gets up to 600.
even government without the private, if you include financial
But
interventions.
apples to apples
it's much
comparison,
higher.
the way Japan counts it,
Yeah.
they have 240%.
Compared to our
the way to the UK,
about 90.
They say it's 90.
Yeah.
The US, I think, is getting close to 100, et cetera.
Yeah.
But this 240% is a debt, an indebtedness level that you saw countries engage in during World War II.
Sure.
When they were fighting World War II, it's actually getting higher than that. So, for example, Abe, the guy who runs Japan, some guy named Abenomics,
Shinzo Abe.
Shinzo Abe, right? I'm American, so we don't care about these things. Some guy named Abe. The Bank of Japan has expanded its balance sheet from 40% to around 50% of GDP over the past 18 months, and
it's heading for 70.
It's heading for 70%.
Yeah.
So the QE, again, the government's buying bonds, and they're just sticking it on their own balance sheet, and they're completely exposed to interest rate risk in terms of rising interest rates. So, for example, the Federal Reserve Bank in America, which is the American Federal Reserve Bank, they're already leveraged at 50 to 1.
Yeah.
So these guys must be leveraged at, well, the straight up and down debt on their as a percentage of GDP is getting around 70%. But some people have equated this to almost a suicide mission, like a kamikaze banker, that they're trying to blow themselves up in the same way that, Pearl Harbor or, they have a culture in Japan of a ceremonial seppuku, of suicide. I mean, these bankers, they don't seem to be acting rational at all. It seems like they're doing ceremonial suicide.
Okay. The thing about Japan...
To you, Lee.
Yeah, no, I've got the ball and I'm about to throw it back at you, Max, between your eyes. The thing about Japan is that a lot of their sovereign debt is held with their domestic citizens. It's not held overseas.
Huge savings, domestic savings.
So just like after the Second World War in your country and in mine, there was tremendous patriotism about buying sovereign debt, war bonds and all the rest of it. In Japan, it's JGBs. So Japan doesn't have that foreign creditor exposure and the related currency risk with its massive
but they've chewed through that. They've chewed through that.
Yeah. What they have done, though, is, they've massively increased their monetary base, but they've seen no requisite increase in broader money. It's very, very important, as many of your very informed viewers will know, that we distinguish between the monetary base, which is heading for 70% of GDP in Japan, and what you'd call broadly the money supply, which is the extent to which that monetary base is then lent out by the banks to firms and households and the broader economy. And what we've got in the UK and what we've got in the US, less so, but what we've got in Japan, absolutely, is a massive expansion of the monetary base, trying more and more and more and more to get the banks to lend, and the banks just saying, no, we're not going to lend, because actually we're getting quite fat off this QE, and we'll just park it on the central bank's balance sheet.
Right, so, therefore, does QE cause deflation, or does it fight deflation?
Okay, this is one of the cardinal economic questions of our time. I would say, because QE allows the zombie banks to carry on. It provides them with cover. It provides them with protection. It allows the politicians not to address the real issue of shaking up the banking sector and reforming it. QE actually causes deflation because it allows
Danny Blanchflower!
It allows us to carry on in this moribund way. But once the inflationary toothpaste is out the tube, once the QE has been done, it can then, at some point when confidence returns, be lent out by the banks and rapidly turn into inflation.
Right,
And
so
that's
what
the
we've been
fear.
saying on the show...
Not
for-
hyperinflation. I'm not saying hyperinflation, by the way, which is 25% a month. I'm not saying that. I'm saying we could have, once this QE money enters the circulation, the velocity, if you like, to use an economic term, the velocity of circulation goes from its current historic low, then you will start to get some inflation in the system. We could easily have in this country high single digit, maybe even double digit inflation in years to come, once this QE money starts to, if you like, find its feet.
Okay, we got about 30 seconds left. What is the risk of contagion? Because my point about Japan being almost suicidal in this approach to their monetary policy, and the fact that they picked up the QE ball. What's the risk of contagion?
This policy is so extreme. In 2008, Japan's monetary base percentage GDP was 20%, as it's shown in the graph on my Telegraph column. We're up at 50% now, having gone from 40% in just the last 18 months. And it's Abe's stated aim, holding on to power, to say 70%.
Right,
But
so they're like the Fukushima of central banks.
As Keynes said...
They should rename it Fukushima Central Bank, because that's what this fella over there in Abe, we got to go. Anyway, on that encouraging note, Liam, thanks for being on the Keiser Report.
Thank you, Max.
Well, that's going to do it for this edition of the Keiser Report with me, Max Keiser and Stacey Herbert. I'd like to thank our guest, Liam Halligan from The Telegraph, and this new...
BNE. Relaunched.
Boy, this is... Oh, it's so hot, I scorched myself. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.